Gold is doing something right now that doesn't make sense. Because normally in an environment like this, you'd expect the gold price to be rising and strongly. Instead, at times, it's been falling. With inflation still elevated and uncertainty still in the system, many investors would expect gold prices to be moving higher. Instead, gold has been uneven and even at times moving lower. So the question is simple. Why is gold moving the wrong way right now? And what does that tell us about where it could go next? Welcome to Money and Power. If you find this kind of clear, no hype analysis useful, do hit like and subscribe. It helps the channel reach people trying to make sense of gold, silver, and the wider financial system. Now, if you've been watching the gold market recently, you'll have noticed something slightly uncomfortable. We're in a period where inflation hasn't gone away. Geopolitical risks are still present, and central banks are under pressure. And yet the gold price is not behaving in a clean, directional way. At times it pushes higher, at times it pulls back, and that can make it feel as though something isn't quite lining up. For those of you who follow these markets closely, you'll already have your own views. But for those newer to gold and silver, and I know more of you are coming in, I want to walk through this in a very straightforward way. Because once you see what people are actually doing behind the scenes, the price action starts to make much more sense. Let's start with the first key point. Sometimes investors sell gold not because they want to, but because they need to. If other parts of the market come under pressure, or if losses start appearing elsewhere, investors often need to raise cash. And when that happens, they don't always sell the weakest asset. They sell what they can sell quickly. Gold is one of the easiest assets in the world to sell. So in periods of stress, gold can fall. Not because it's weak, but because it's liquid. It becomes a source of cash. The second factor is interest rates. But let's keep this simple. If investors think interest rates are going to stay higher for longer, or not fall as quickly as expected, that changes behavior. Some investors step back. They wait. They don't rush in to buy gold. And when buyers step back, even temporarily, the gold price can struggle to move higher. The third factor is profit taking. If someone bought gold at a lower price and it has risen significantly, at some point they will take some money off the table. That's normal. That's how markets work. But when a lot of people do that around the same time, it can push the price down, even if the bigger picture hasn't changed. Now, when you put those three things together, that picture becomes clearer. You have some investors selling to raise cash, others holding back because they're unsure about interest rates, and some taking profits after a strong run. And all of that can make gold look like it's moving the wrong way. Now, before we go further, for those who want to go deeper into this kind of analysis, I do publish a more detailed breakdown in the 2% brief on Substack, looking at the signals behind gold, silver, and the broader system. There are links in the description and pinned comment if you wish to take a look. Here's the important part. None of what we've discussed means the long-term case for gold has disappeared. It simply means the short-term forces are pulling in different directions. And this is where it helps to separate two things: the long-term case and the short-term behavior. The long-term case for gold is built on structural factors: debt levels, monetary policy constraints, currency stability. These things do not change week to week. But the short-term gold price is driven by what people are doing right now. Are they buying? Are they selling? Are they waiting? And those decisions can shift very quickly indeed. So when gold appears to be moving in the wrong direction, what you're often seeing is not a broken market. You're seeing a market adjusting to short-term pressures. Now, for those newer to this space, this is where a lot of confusion comes in, because it can feel like the market is contradicting itself, but it isn't. It's just operating on different time frames at the same time. So instead of asking, why isn't gold rising more quickly? A better question is, what would need to change for gold to move decisively higher? And usually that comes down to one of two things. Either interest rates begin to fall in a clearer, more predictable way, or confidence in the financial system starts to weaken more visibly. Until then, you often get this kind of movement. Uneven, at times confusing, and occasionally frustrating. Now this becomes even more important when you look at silver, because silver sits on top of all of this, but with an added layer of volatility. It responds to the same forces as gold, but also to industrial demand and broader economic activity, which means it can move more sharply in both directions. And that's exactly why I've published a full breakdown on silver, looking at whether it's still undervalued or whether we're approaching a more difficult phase in the near term. If you haven't seen that yet, I'd suggest you watch it next. And I've put a link to that in the description below. The key takeaway, therefore, is this. When markets behave in a way that doesn't seem to make sense at first glance, there usually is a reason. It just isn't always immediately obvious. And in the case of gold right now, what you're seeing is not a contradiction. It's a combination of real-world actions. People raising cash, people waiting, people taking profits, all interacting at the same time. Now, if you found this useful, do hit the like button, and if you haven't already used them up, give us a hype. It really does help the channel reach the right audience. And if you're not already subscribed, make sure you are, because we cover these developments as they unfold. Now, if you want to take this further, I've just published that full breakdown on silver, looking at whether it's still undervalued or nearing a top. That video should be appearing on the screen now. I'd strongly suggest watching that next, because it builds directly on what we've discussed here. Thank you for watching, and I look forward to seeing you again soon.